What's up, traders? Welcome to 7minutestocks.com, utilizing technical analysis to suggest security direction based on human emotion. Today is May 10th, 2012. This analysis is for entertainment purposes only. I do not and or will not make any recommendations to buy or sell anything. This is simply my opinion. Alright, lots to talk about. Let's get started. The first thing I want to mention is what happened after the market closed was the S&P 500, I believe it was them, downgraded the JP Morgan. Then we had a huge drop in the E-mini futures based off of that news. Now here's the thing, that's the emotional part of a trader is just trying to get out of the market as fast as possible, simply because JPM is the leader of the finance sector in the stock market. Basically, JPM can be used as sort of a prediction of where the SPY will go, which is the tracker to the S&P 500. With that said, I believe JP Morgan said, well, yeah, I think we misplaced or lost, or it's possible that I believe it was $4.2 billion just disappeared out of thin air. But don't worry about that, because we shorted the market. So based off of this news, we're pretty sure the market will crash, and we'll make that money back. That is what you call market manipulation, everyone, and that is what we all look out for, and that is why we kind of read the charts. That's why charts are so important, because we can kind of see what direction these things are going to go actually before it happens. In any case, let's get started with the SPY. The SPY made a corrective move. I want to say kind of like a pullback right back into this trend line here. I believe in my other videos I stated that anytime you have a breakout of a trend line, let me just get rid of this one up here. We normally try to the normal action is a retest back to this line before we come back down. I mean, this is on the MCL, the mathematical calculated level. At first I thought this was a little bit too low, but now it doesn't look that far off, to be honest. I mean, if you think about it, it's not that much far down. Now let's just say, for example, we tag this line tomorrow. I mean, tomorrow is normally a low volume day, but being with all the news coming out, plus to the Asian, I think the CPI is coming out. This could actually literally fall. In fact, most people do is when there's a retest on this trend line here, they normally already short the market or short the stocks that retest trend lines. So we'll just have to wait and see what happens tomorrow. Tomorrow would be, the definitive answer. I mean, if we close below this candle here tomorrow, then I'm pretty sure next stop, I mean, we're gonna have some resistance. I mean, some support here. But I mean, like out of all the three major emotions, which is fear, greed, and hope, fear is the strongest one, and that's why markets go down faster than they go up. I mean, markets can take out weeks of gains in just a single day. Okay, and that's why what we want to do is make sure that our levels are farther down than the normal when we were more of a bullish standpoint. So right now we have a gap fill here. However, chances of us, we might get a small bounce off this gap fill, but an actual substantial bounce I think will be around here, that level, or a little bit lower, which is this level here. Okay. This is the daily chart of the dollar. As stated in the previous videos, I mean, we can get rid of this line already. I mean, broke up past this trend line up here. We've confirmed. I was expecting a little bit of a pullback on the dollar before we go higher, but right now, basically, that could still happen. We're kind of just right into that line right there. I mean, as you can see, we're just right into that line, so there's a possibility we could pull back, but that's kind of hard to believe now that the E-mini futures are down $8.25. But who knows? Tomorrow might. I mean, this just could be a non-event all of a sudden, and the E-mini futures might just float up like it did on Sunday, and then that should essentially bring the dollar back down. But again, because fear is so much stronger than greed and hope, there is a possibility that the dollar could blast through here, and then your next target is this resistance point there. Ultimately, though, if you pass that one, then I don't doubt that the dollar can't test up here, and it does. If it does, then the markets should see a dramatic fall. So in essence, what we're doing is we had a down move, and then now we're just consolidating to a retest of this trend line before we head back down, and that's why we got a little bit of a boost today. I mean, we got the red candle here, but we actually closed a little higher. I think it was a few cents higher, which was predicted from the last video that we would get a small bounce. Definitely not something big, but definitely small. Last but not least, speaking of the fear index, we have the VIX. The VIX came down just a little bit, so fear subsided. I'm pretty sure fear should go higher tomorrow based on these news. But as you can see, we broke out of this trend line, and then now we're coming back 50%, right, before we go higher. So this pattern is actually playing out the way it should. All right, some stocks I want to talk about is Apple. Apple is hurting. Apple right now, discussed in the previous video, that is doing this down move, consolidating here right into these moving averages. And I said in previous video that Apple is setting up to be a very bearish pattern, and a target of this here is not too far away. Okay. So watch out for Apple. Right now it's very bearish. If it breaks out of this bearish pattern, then it's going to break out with authority. But if this pattern plays out like it should, then we should see Apple come down. Looking at the company that was downgraded, which is JP Morgan. After hours, this is why it's gray over here. It comes straight down, and now we're consolidating. So coming down further tomorrow wouldn't surprise me at all. Having a gap down tomorrow at least. But you never know. So we'll keep an eye on JPM. Looking at Cisco, Cisco had really terrible earnings yesterday. We had this huge gap down here. Let me see if I can get a better view here. Oh. Alright, so Cisco had bad news, and we had a huge gap down. Alright, I would be interested in Cisco at the 768 plus this pivot point if it gets there. Okay. Alright, ABX did what I expected. It tagged this upper trend line here, and then it started heading back down, and it's right now resting on this MCL. If you're not in ABX right now, I would stay in cash. For Baidu and for Caterpillar, they never met their levels today, so those trades are off the table. Okay, so I was looking at it somewhere down here. Actually, if it came down here, I'd still maybe be interested, at least for a day trade. Salesforce.com is CRM. I'd be interested in doing a long play at this point here. The 200 moving average is very attractive right now, but again, fear is stronger than greed. So if these guys just come down strong with authority, then I'll probably take a long play at the 618 level. Then we have SLW. I took a trade on SLW at 25.60, and then I believe I got out at about 27 flat, around there. So I was playing with options, so I took a 20% profit, and I got out because one thing I noticed was this that they have earnings sometime next week, which happens to be Options X week. So I didn't want to take the chance in holding it in overnight, and that turned out to be a good idea. And that is your 7-minute stocks update, and we'll see you in the next video.